Thanks for joining us at xam.com for this Forex Preview video. We'll be having a look at the RBNZ policy meeting coming up. I'm Cristina Marujos, and joining me today is Cristina Bartenido, investment analyst. New Zealand has arguably done a good job in containing the virus situation, and as the vaccination program is gradually picking up speed, economic data for the first quarter have come in solid. Now, Cristina, the RBNZ meets early on Wednesday. Given the current optimistic picture, are we expecting policymakers to announce any significant policy shifts?
Hi, Christina. Well, expectations are currently for the central bank to hold its interest rates steady and its asset purchases unchanged despite the improving economic outlook. New Zealand and also Australia have shut their borders to the rest of the world to protect their citizens from reporting COVID infections. And for more than a year now, virus cases in these countries have been rising at only double digits. So this virus management seems to be very successful to contain the virus and let the super accommodative monetary and fiscal policies to support businesses and consumers. However, on the other hand, this may not be a sustainable solution because tourism is an important sector for the economy and the borders cannot be closed forever. At some point, the government will lift these travel bans to raise income from tourists, but this will likely multiply infection cases and deteriorate the health crisis because citizens remain hesitant about the vaccines and only 7% of the adult people in New Zealand have been vaccinated so far. So the government will likely wait a bit to raise confidence on the vaccines and boost its vaccination program before lifting its travel boundaries, and during this period current monetary settings could be appropriate to finance households. Of course, such a decision could be challenging because we already have encouraging signs that the economy is gaining momentum in the first quarter. The unemployment rate has further diminished, the employment growth remains positive, and yesterday retail sales for the first quarter beat negative expectations and posted positive growth instead. Also, the super low interest rates have pushed housing demand and growth in house prices to fresh record highs, and besides that, there are growing fears that inflation will surpass the central bank's 2% midpoint target in the next month. So this is somewhat questioning whether monetary policies should remain accommodative, but on the other hand, the uncertainty around the pandemic and the sell-off in bond markets suggests that a tighter policy could be premature and could risk the recovery in the economy since the unemployment rate is also well above the central bank's target. Of course, we have to admit that the inflation rate is increasing the division between policymakers, and some board members seem to be leaning towards a tighter policy. Moreover, the government has been issuing a smaller number of bonds recently because of the improving conditions, and that is adding a downside pressure to the central bank's bond purchases. So it will be kind of difficult for the bank to stick to its plans, and investors will keep a close eye for any clues that the bank is thinking about tapering its bond purchases, since this process will precede any rate hikes. So overall, I think that besides an upgrade in quarterly economic forecasts, the central bank will not announce or think about any changes at the current stage.
And now turning to FX markets, the Kiwi has been quite stable against the US dollar lately. How should we expect it to move after the RBNZ meeting?
I think it depends how optimistic the bank will sound tomorrow, and more importantly, if there will be any signs that the bank is thinking about tapering. So if that's the case, the Kiwi could recoup some of its previous losses, and from a technical perspective, it will be interesting to see if Kiwi dollar can climb above the 0.73 resistance level, a sustained strength above a symmetrical triangle. And if the bank highlights the negative risks to the economies, instead it sounds more dovish than analysts expect, saying that there is still some way to go before cutting the pace of bond purchases, hiking interest rates, then the support level around 0.7140 could collapse and a new bearish phase could start.
Cristina, thank you for joining me today. This was a Forex preview on the RBNZ policy meeting. Thanks for watching at xam.com.